If you had invested 1 lakh rupees in the Sensex 10 years ago, what would your money be worth today? The answer highlights why long-term investing in India's equity market continues to be one of the most powerful wealth-building strategies. Back in 2015, the Sensex was trading near the 27,000 mark. Fast forward to 2025, the index has surged past 79,000, delivering a CAGR, compounded annual growth rate, of around 12-13% over the decade. This means your 1 lakh rupees investment would have grown to approximately 3.4 lakh, more than tripling in value without you having to do anything. And that's just the price appreciation. If you also factor in dividends, the total return would be even higher. On average, Sensex companies offer a dividend yield of around 1.5% annually. Over 10 years, reinvested dividends could have added another 15-20% to your corpus, pushing the value closer to 3.7 lakh rupees. How does this compare to other asset classes? A similar 1 lakh rupees in fixed deposits at 6-7% interest would have grown to around 1.9 lakh in 10 years. Gold, while considered a safe haven, delivered about 8-9% CAGR, taking 1 lakh rupees to about 2.3 lakh rupees. Clearly, equities, despite short-term volatility, have significantly outperformed. Of course, this journey wasn't smooth. The past decade saw sharp corrections. From the 2016 demonetization shock and 2018 NBFC crisis to the 2020 COVID crash, where the Sensex briefly plunged below 26,000. Yet, investors who stayed patient and continued their SIPs were rewarded with stellar long-term returns. The key lesson? Time in the market beats timing the market. Even if you invested at a bad time, discipline and patience allowed your wealth to compound. With India's economy expected to grow strongly over the next decade, the long-term story remains intact. For new investors, the Sensex return story proves why starting early, staying invested, and using SIPs is the smartest way to build wealth.